What's up, everybody? Welcome back to the channel where we break down smart investing ideas for regular Americans who want to build real wealth. Today, I'm going to show you a stock that I believe every American investor should consider owning and why it could be a major cornerstone of your long-term portfolio in 2026 and beyond. I'm not talking hype. I'm not talking speculation. I'm talking fundamentals, growth potential, and real-world economics. So stick with me. This could be one of the most important investing conversations you hear this year. Before we jump in, let me tell you this. The most successful investors don't chase trends. They find high-quality companies with strong competitive advantages and hold them over the long run. Today's pick checks all the boxes: durable business model, strong earnings growth, competitive edge, essential product or service, reasonable valuation, and most importantly, it has the potential to outperform over the next decade. Let's break it down. All right, first, let's talk fundamentals. This company operates in a sector that touches millions of Americans every single day. From consumer technology to essential services, it's a business that simply doesn't go out of style. Here's why that matters. Companies that provide everyday value tend to deliver consistent revenue. Consistent revenue leads to predictable earnings growth. Earnings growth is the fuel for long-term stock performance. This isn't a flash-in-the-pan theme. This is a business that generations of investors have built wealth from. Now let's talk growth. Over the last several years, this company has increased its revenue, expanded into new markets, reinforced its brand presence, invested in innovation, and even in uncertain economic environments, it continues to grow earnings. That tells you something about how strong the business really is. Again, we're not short-term trading. We're thinking 5, 10+ years down the road. That's how real wealth is built in the U.S. stock market. This company isn't just another name in the index. It has a real competitive moat, meaning it's not easy for competitors to take market share. Whether it's brand loyalty, proprietary technology, network effects, or superior cost structure, the business has advantages that protect its future earnings. That's exactly what institutional investors look for, and why many Wall Street pros include it in their models. This isn't theory, it's strategy. Another reason this stock stands out, it rewards shareholders. Some companies just sit on cash or reinvest it poorly. This one returns capital to investors through dividends and stock buybacks. That means shareholders see returns even when the market is flat, and that's a huge advantage in sideways markets. Now, listen, no investment is risk-free. Here's what you should be aware of. Market volatility can swing prices. Earnings can miss expectations. Broader economic shifts impact all stocks. That's why we don't go all in on just one name. Diversification matters, but that doesn't mean you ignore the best opportunities. It means you use them wisely as part of a broader plan. If you're thinking about adding this stock to your portfolio, use a reliable brokerage, buy in small increments, dollar cost averaging, think long-term, not daily trading, stay disciplined, and don't panic on dips. This is about building lifelong wealth, not winning a short-term bet. All right, if you made it this far, thank you. Here's the bottom line. There are stocks worth owning for the long run. Great businesses can fuel financial freedom. A disciplined, consistent investing strategy wins more often than blind speculation. If you found value in this breakdown, do me a favor. Smash that like button, tell me in the comments which stock you think everyone should own, and subscribe for real, no BS investing insights every week. Thanks for watching. See you on the next video. USA and the great stock market.